Friends, it's a special day today, and a warm welcome to each and every one of you on October 2nd. Our
Warm welcome
next
to each and every one of you on October 2nd. Our warm welcome to each and every one of you on October 2nd. Our warm welcome to each and every one of you on October 2nd. Our warm welcome to each and every one of you on October 2nd. Our warm welcome to each and every one of you.
Friends, welcome you all for this very special session today. Today is October 2nd, Gandhi Jayanti, our father of our nation's special day. We are going to share today a very important topic. Recently, Reserve Bank of India and also Ministry of Finance has issued updated rules and regulations with respect to overseas investments. Need to make one special point here that in the past 2 decades, there has been substantial acquisitions, investments outside India by Indian corporates and resident individuals. And this particular rules and regulations, which has been recently announced, especially on 22nd of August 2022, this particular notification has a special significance. We have with us two eminent personalities. We welcome both on behalf of all the participants who are virtually connected. CA VV Sampath Kumarji, a veteran chartered accountant and an expert on indirect taxes, a valuer registered with IBBI, and also an insolvency professional registered with IBBI. Also, Madam J. Lalita, an ex-banker with loads of experience in Forex department. She has headed an individual independent foreign exchange operations for a large public sector bank, and her expertise and practical experience will definitely take us this particular subject, which is always considered to be a taboo and most sought after subject, to take it with ease. Let me hand over the session to CAVV Sampath Kumarji to lead and to take over the session.
Dr. Raju, Madam Lalita, very nice to be part of this great initiative of knowledge sharing in this subject of foreign exchange. Raju, it's a very auspicious day. Gandhiji, father of the nation, brought the freedom by fighting with the Britishers. After getting the freedom, we are gone from stage to stage. One such important aspect is in the growth pattern, the management of foreign exchange, conserve and improve. In this regard, today's session has been very rightly coined and named as foreign exchange management with respect to overseas investment. I heard of many of the newspaper column FDI has come, foreign direct investment, this that. I never heard of the term called overseas investment. What is meant by the term overseas investment, Dr. Raju?
Okay. It's a very interesting term. Indians, we can call them as resident in India. The person resident in India means individuals as well as corporates. Indian corporates and Indian resident individuals, can they go beyond India and do business? Especially as entrepreneur, software entrepreneurs, manufacturers, we recently have witnessed acquisitions of large corporates. Tata Group has acquired beyond. So there were times when foreign companies used to invest in India, and they used to take over stakes in Indian companies. Now the time has come for Indian corporates and Indian individuals. We have high net worth individuals today. 10 years back, that gentleman was nowhere in the list, but today we see some of the Indians in the top 10 ranking in the global billionaires, trillionaires. So, the concept of cross border acquisitions, investments outside India, so that globalization truly happens. So these regulations and rules are must. So when funds are going outside India, how to regulate? Reserve Bank of India is the regulator, and the Ministry of Finance under the Department of Economic Affairs, they are the ministry who actually gives direction, and RBI is the regulator who does the implementation. And overseas investment is a macro term. Is a macro term which encapsulates two terms: financial commitment as well as overseas portfolio investment. For example, there are I want to invest in Infosys Limited in India. Very good. I am permitted. Gopal Krishna Raju is permitted. I want to invest in Tesla. Tesla is a US company. Am I permitted to invest in Tesla? So then these rules and regulations I have to go. So that is called overseas portfolio investment. Now there are two things. If I have to only do trading, then I will not come under this. If I need to acquire control, I need 2% stakes. I need 8% stakes, but with the board control. Then these rules and regulation applicable. I want to do only trading. I want to be only shareholder. These rules and regulation not applicable. Second, I want to be an investor with more than 10% holding in a foreign listed companies. A foreign entity which is listed in foreign stock exchanges, I need to acquire 12% holding, 18% holding. Then these rules and regulations are applicable. So we call these as overseas direct investment. Either investing in an unlisted company or listed company above 10%. All these we call it as the overseas direct investment. Now, if I need to be only a shareholder, I don't want to have control. More than 10%, I don't want. Less than 10%, but with control, I want. Then it is ODI investment. No, I want only be a shareholder. I want only dividends alone. Then it is called portfolio investment. So I will identify a portfolio manager. I'll give 10 crore to him in INR. Please invest in US dollar, Australian dollar, Singapore dollar. Get me shares. So that is called OPI. So OPI and financial commitment both will come under overseas investment.
Dr. Raju, in simple terms, as a layman, I can understand the investment going from India in an entity situated outside India with a subclassification of OPI or ODI. We always heard about FDI. Now we clearly distinguished the terminologies: what is portfolio investment and what is overseas direct investment. Thank you very much. Madam Lalita, I have heard about different types of banks. What is meant by AD? A for apple, D for data. AD bank. What is the term connotes? AD bank.
Well, whenever we talk of foreign exchange, all of us come across any circulars, any directions of Reserve Bank of India, a term called AD banks or AD branches. These are the circular for the AD banks or AD branches. So what is that? Not everyone can deal in foreign exchange in India. There are organizations, there are companies or firms, the entities which are authorized to deal in foreign exchange market, like buying foreign exchange, buying and selling the foreign exchange securities, dealing in foreign currencies. So they could be a bank, it could be a money changer, or an OBU or an offshore banking unit, right? So when you talk of bank, all these people are now generally they are all known as authorized persons, right? But when you talk of bank, they are still called as authorized dealers. And what are they? The banks are there are certain norms to be followed. There are certain conditions and terms to be adhered to get the license of AD branch. So these are the branches of the banks in India. This is only for domestic banking, right? These are the branches of banks in India who are authorized to deal in foreign exchange business apart from the domestic banking business. So these branches are called AD branches. They go time and again. The Reserve Bank of India comes out with certain guidelines, like it's basically for the public interest. So when you say one small example, I'll tell you one condition they put is like there should be a forex business, like it's a forex turnover. The what is a volume, what is a quantum of the forex business in that particular branch. One. Two is one condition what RBI puts is that in 80 branches of banks, the people who work in forex department ought to be having the expertise in it. They should have been trained in foreign exchange, because as we know, like as we go through this session and even we have seen in the earlier sessions, webinars, that how risky and important it is for the country at this juncture, especially to deal in forex. So the branches which are authorized to deal in forex business of the banks in India, it could be an Indian bank or any other bank, like it could be a PSU or a private sector bank or a foreign bank. But these branches are called AD banks.
Thank you, madam. The point is the banks in India who are licensed to operate the banking operations, certain designated or specialized branches with more infrastructure, knowledge, everything is further categorizable as AD bank or AD branches. So, not all branches in India of national PSU banks or other banks are
Yeah.
capable or permitted. Only those with certain norms who are eligible, entitled, and applied for the recognition is granted by the central bank. Thank you, madam. Now, Dr. Raju, the investment you said OPI, ODI, everything. The investment can be generally, broadly, can be in an equity format or in a debt format of an investment. Money going under the category of a ownership or the lending. So lending comes means that there is a debt. So the debt can be, there are two terms, the debt instruments, non-debt instrument again further. So what are the terms called debt investment and a non-debt investment from the perspective of FEMA, Foreign Exchange Management Act?
Very good. Now, once these rule and regulations permit to invest money outside India, I mean, what form you can actually invest? They use a term, actually, it's a very wide term, fund based and non fund based. Both are called as financial commitment only. And in financial commitment, one aspect is fund based. So, fund based, how can you invest? You can either invest as equity, so that means ownership. So, participation or invest in equity of the private company. The same model what you have in Indian Companies Act model, you also have it in every other country. The nomenclature and terminology may be different. Maybe here we use a word called limited. In other countries, the term limited may be there or INC may be there. So private limited companies or public limited companies, listed, unlisted. And in this particular rules and regulation, there is a homogeneous investment is overseas investment is also permitted. Education sector trust and hospitals in India are also permitted to invest outside India in any, for example, they have a collaboration. An Indian university here or an Indian college, they want to collaborate with an Australian university or a college or a Japanese university or a college. Then they want to invest there. They want to create an endowment there. Permitted. So under this, but permission is not generic permission and approval permission. Especially for trust and societies, there is no generic permission. Otherwise, called automatic approval. There is no automatic approval for them. So you need to apply to RBI. They'll ask why you want to invest in that particular university, that college. What is the nexus? Why you want to do? Who will be benefited? All this you have to explain to RBI. They'll give us special permission. Then you can invest. But you have automatic approval. So green route is there, but they have given a limit. Every time, please don't come to RBI and ask for an approval. They give a list of prohibited activities, restricted and prohibited activities. Apart from restricted and prohibited activities, all are open to invest in equity and debt. Equity is in incorporated entities. Now, like LLP, you also have LLP outside India. So capital participation in LLP is also permitted. Then another one, I want to invest in immovable property. Now, there was an immovable property separate regulation that was there. This 22nd August 2022, they have withdrawn that particular regulation also, and they have included that in this particular 22nd August 2022 overseas investment. So, overseas investment even includes acquisition and dealing in immovable property also, and even contribution to trust and society I mentioned, and also contribution to depository receipt. The base will be an equity, similar like ADR, GDR, EDR, European deposit receipt, global deposit receipt, American deposit receipt. So this deposit receipt, the base will be equity or base can be a debt also. And with respect to a debt instrument, it can be a government bond or a corporate bond. In India, we call it as a debentures. Maybe bond is a very limited usage we do. And as a global terminology, there is no concept called debenture. It is only called as debt. So even loans, rather than a bond or a corporate bond or a government bond, even a loan. Can I give a loan to as a loan to a foreign entity? Yes, you can give. So that is also permitted, but there are certain restrictions. Without equity participation, can I give loan? With the equity participation, can I give loan? So there are two. So that means as a shareholder, I want to give a loan, but non-shareholder also can I give a loan? Both are permitted, but there is a difference between both. So debt instruments, bonds, and borrow, that means lending to the foreign entity, and deposit receipt whose base is debt securities. So all these are debt and non-debt instruments. So through this we can invest.
So there are varieties of flowing the money into the foreign investment, and channelization can be in this or that, and various permutations and combinations are possible is the taking which I take from the overall detailed reply, Dr. Raju. Madam, Raju initially made some observation about the recent changes made by the central regulator, Reserve Bank of India, with respect to overseas investments. There are two such prescriptions. One is called Foreign Exchange Management Overseas Investment Rules 2022, and another one is Foreign Exchange Management Overseas Investment Regulations 2022. What are the essential differences between these two, madam?
Well, this is actually something we were discussing. When we talk of rules, rules are kind of like notifications that you get it in the official gazette, right? It's
Yeah.
given by the Ministry of the Finance. But this is an open, it's open to public, and it's for everyone to know what the government of India wants you to do as far as the overseas investment is concerned. But for the authorized dealer who is ultimately going to take it forward and make it happen, and the authorized dealer is going to be the link between the investor, that is the resident Indian or the entity or the individual, and the government, the ministry. So the in between these two are the authorized dealers, right? So authorized dealers have to be told key how to do this. So that is called regulations. So whatever is the rules that is mentioned over there in the gazette, it has been passed in the Parliament Act, right? What the Ministry of Finance wants us to do, like, but how to do it? So there are the regulatory authority is there, Reserve Bank of India, which has issued master directions to ABs as FEMA Overseas Investment Regulations 2022. For example, like, okay, there are something called directions also, right? So it comes in this order: the rules, the regulations, the directions. Rules are open to everyone. Regulations are what is the how, why it should be done, how it should be done. And again, the enhancement and the development office is the directions, the master directions. Through that, RBA will be giving all these instructions to the AD banks. One example, this is something you have to do it. LSF, right? Late submission fee has to be charged. Okay, but how much to charge? How to charge? All that will come in the regulations. So it's like the map is given, but the GPS is the regulations.
So, thank you very much, madam. As I just draw an analogy in respect of other tax laws, for example, there is an act, there is a rule. The regulations are subsidiary, subservient to the law and the rules. So, whatever the regulation is to a specific category of persons issued by the central authority, and rules are open source document available to public so as to achieve the overall objective of the prescription contained in the main act being in this discussion Foreign Exchange Management Act. Dr. Raju, there are various modes of investments and financial arrangement. What are the various types of financial commitments that can exist in an investment like this?
It's a very important question, actually. Of the entire overseas investment, this is the crux, I will say the backbone. Maybe if this one point is clear, all these are within this. Because point number one, if I need to invest outside India, one route is called as a automatic route. The other route is called approval route. Automatic route means they have given one circle. So you drive the two wheeler or cycle or car within that boundary. Then you have to only comply with a suo moto voluntary compliance. What is voluntary compliance? Reserve Bank of India has given a master direction called reporting under FEMA. So this automatic route, so voluntarily within a prescribed time limit, I have to inform through the AD, what is the authorized dealer category 1 branch, category 1 banks. So through them, I should not directly go to RBI. That gate is always closed. So the gate will be open only through AD. So my banker. So I have to comply with the master direction reporting. That's all. This is called automatic route. And in the automatic route, they have given one circle. That circle is called 400% of net worth. That means four times. If I am Gopal Krishna Raju is worth 50 crores, now I can invest outside India 50 crores also. I will borrow another 50, I'll invest outside. And four times 4x of 50 crores is 200 crores. INR, I can invest outside India. Now, this, how it will be measured? Latest, we are now on October 2nd, 2022. So The latest audited balance sheet will be Gopal Krishna Raju's 31/3/2022. As per that balance sheet, what is my net worth, which will be certified by my statutory auditor. So on that, four times. That is the limit. Whatever I am actually investing outside India, my statutory auditor has to actually certify whether that money going outside India has it crossed the Lakshman Rekha or not. I can I can send as many tranches. Every week I can send money. 52 weeks means 52 weeks also I can send. Then I have to get 52 certificates from my chartered accountant stating that it does not cross the Lakshman Rekha. Now, if they are about to cross Lakshman Rekha, the AD will put a bar. No, no. Go to Reserve Bank, get an approval. Why you are taking so much of leverage? You are only worth 50 crores, but you want to send money 500 crores outside India. So that means from where you are getting money, why you want to invest so much outside India? You don't have facilities in India to invest. So all this I have to explain. Otherwise, they will not permit me. So this is the first point. Now, this financial commitment, I told you, it is both fund-based and non-fund based. I repeat, fund-based and non-fund. That means, can I give guarantee? The regulation, what Madam said, Reserve Bank of India has given that regulation. Regulation 5 says, can I give guarantee to a foreign entity? Yes, that guarantee also includes in this financial commitment. So, for example, equity money, I have invested equity as 70 crores. Then my net worth is only 50, so 200 crores. So the balance 130 crores I can give guarantee in INR. So now guarantee can be a corporate guarantee, can be a performance guarantee, can be a personal guarantee also. Individual also can give guarantee. Then individual's network will be connected. And a bank guarantee also is there. All connected only to the net worth only. I can even say I will give you 400 crores worth of deposits, so give me a guarantee. But who gives a guarantee? So Gopal Krishna Raju is giving a guarantee to a foreign entity. So my net worth is the criteria. I may give the security whatever limit, but moment that Lakshman Rekha is crossed, it is not automatic. It is approval route. So guarantee also is a financial commitment. Equity is also a financial commitment. Now debt is also a financial commitment. I told you debt there are two types. I am an equity holder. I am a shareholder. Now they are asking, no, 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 we need more money. You give me as a debt. Yes. So if I'm giving as a debt, I can even give to a subsidiary, step down subsidiary. But please, what is step down subsidiary? Holding company. Since I'm investing in a foreign company, that is a subsidiary. Now, what is a step down subsidiary? That subsidiary will invest in another subsidiary. But please understand, here round tripping is not permitted. I will invest in a foreign company will again invest in Indian company. So this is very, very critical. So this is restricted. So this is actually restricted. I will not use a word called prohibited. So therefore, there is a madam can also supplement here, because as a banker, they will monitor this through a reporting mechanism, because that is very, very critical, because AD only have to ultimately do. So at the time of sending info, at the time of sending the remittance also, AD will monitor. AD has to check the limits. Post remittances also, performance has to be monitored. So both is very, very critical. Now, apart from this, I'm going to share with you a very, very important financial commitment. Can a pledge or a charge be created on foreign entity? For example, I have a property here in Bangalore. I have a property here in Bengaluru worth 10 crores. I have already taken a loan for my Indian entity by pledging, by creating a charge on that Bangalore property for 3 crores. So there is still more gap is there. Now, since I've invested in Australia or United States or Japan or Canada, I need some more funding. So equity is over. Can I use this asset in India? I repeat the word, the asset in India. Can I use it? A charge can be created on the asset in India by mortgage or pledge or hypothecation or any mode, and that money can I invest, can I give it as a loan to my foreign entity? Anyhow, debt you can give, but can you create an asset charge in India and you can do it? Yes, you can do. But all this subject to the overall Lakshman Rekha of 4x of my net worth. So this is your the various model. So one, equity, debt, debt with equity, debt without equity, and pledge or charge, and also guarantee. But I want to make one very important observation here. I am not an equity holder. I am not a shareholder, but I am giving loan to a foreign entity. Their rate of interest is very, very important. But if I'm equity holder and giving a loan, I'm a owner. I need not bother about the rate of interest. But if I'm not a shareholder, I'm giving loan. Very important is the rate of interest should be at arm's length. So what is the market rate of interest there? So I should actually lend at market rate of interest. Maybe if you lend more than that, government of India will be benefited. If you lend less than that, government of India is actually will not permit that particular lending. So we have to be very careful with this. So at the end of the day, it is not the rules and regulation that matter. It is the business that matters. So these overseas investment rules and regulations are more easy rather to understand from a business perspective rather than as a rules and regulations perspective.
Dr. Raju, you highlighted about the commitments can be automatic route or under the approval route, whether it can be equity based or debt based, equity with debt or equity without debt, and it can be the 400 percentage of net worth, and it can also be fund based, non fund based. It can be pledge or trust. Varieties you have touched upon very detailed fashion with respect to the types of commitments and the subcategories of financial commitments. Madam, when I go for these overseas investments, is there any reporting requirement periodically or once, or what is the types? And if there is any delay in my compliances with respect to reporting, what are the consequences attached to that?
Well, as Dr. JK has said it rightly, it's very important to know about from the business angle. How do we get to know? We need to know what is a performance. Like I have sent money from here, I've invested in a foreign entity, but what is the business being done? How is it being done? So RBA has got every right to know. The government of India should know when there is a foreign exchange going outside India, like what is a developmental aspects that is happening there, right? So it's not anything like money laundering or anything. So always we know that whenever there is a performance there should be a report of it, right? So that is how we have your financial statements as chartered accountants, you know it. So this is something written. So I need to know as a regulatory authority what's happening in those businesses that you have invested. So there is a condition that the annual performance report has to be submitted to the AD bank, and that has to be certified by the chartered accountant. When, like, how do they do it? When it has to be submitted, certified by chartered accountant, when it need not be, because everything is now online, right? So let's see, like, first, when I give a proper report, fine. If I don't give a proper report, there is something incompletion, it is not treated. This is a major change in the new circular of August 22, is the late submission fee that's being levied on non-submission. So even if it's incomplete, it's treated as non-submission. Okay. So if anybody, any Indian resident, individual or an entity is acquiring any equity outside India or investing in their the acquisition of the foreign securities outside, then they have to give a report. So there are many ways in which it can be done. Like Dr. J.K. as I already explained, like a guarantee, or it's like how fund based and non fund based, everything is treated as a financial commitment. There is another one, something called Indian Depository Receipts, that's IDR, wherein, like, for example, a foreign entity wanted to invest in an Indian company. So, what SEBI will be doing, it is like take their shares, like the foreign exchange, and then give them the equivalent shares in the Indian company in rupee. Now, if that is being converted, the dues that has to come or any give and take, whichever has to happen, that doesn't happen, then there is a possibility of converting it into an equity abroad. Then even that has to be reported in this. Okay. Under LRS, we may be investing. That is, we all know that that is allowed, right? Investment in joint venture or in equity outside India under LRS for resident individual, even that has to be reported. Okay, right. If all this reporting has to be done, when is it to be done? What is that delay? You ask me, the consequences of not reporting it. When I talk of the consequences, then you need to look at what are all the different forms and returns I need to file. There are forms called ODA Part 1 or ODA Part 2, Part 3, or Form FC, a lot of forms, APR or FLA returns, and all these things are there. So these are segregated into two parts. One, which captures the return, which talks about, which captures the capital flows. If that is not submitted, that those returns are not submitted on time, and then there'll be a penalty of or late submission fee of 7,500 rupees. But if there are certain returns like Part 1, Part 3 of ODI and Form FC, vagera, vagera, or any other return, which captures the capital flow, if it is not submitted on time, then there'll be 7,500 rupees plus there is a percentage. Some bips are added, 0.025 bips or percentage is added, multiplied with the amount of the investment and multiplied with the period for which there is a delay part of it, where there has been a delay wherever. So that is also rounded off to the nearest month, even then it's multiplied. So you can imagine this LSF amount, the late submission fee amount, how much it's going to be. It will be quantified in a huge way, and it is as per return basically. Okay, how do I submit it? If I don't give it, there is a period that is given, and if it is not submitted within that period, like there is a due date, it has which, and if it is the reporting or submission is not done, or up to 3 years from the notification of OI regulations, it's not done. So you don't even know. The RBI doesn't know. The AD doesn't know what has happened, because there was one important mention was by Dr. GKR in saying that monitoring the performance. Yes, so that is gone. If they don't submit the report, you are not going to know it. So what happens then in that case is how do we rectify it? For everything, there is a rectification, right? So this LSF has to be paid. It has to be paid by way of a demand draft favoring Reserve Bank of India. And there are regional offices which are attached to different zones of India. So there it has to be submitted. Till then, what happens if I don't submit my report? I've not rectified it also by paying the LSF. In that case, what happens means you cannot, as an Indian entity, a resident individual or an entity, cannot undertake any other financial commitment outside India. Your AD will not do any outward remittance of yours. So what we have seen is, like, I'll just quickly say, the annual performance report has to be submitted. If not submitted on time, then what? In which cases it has to be submitted? Whether whatever it is, whether it is fund based or non-fund based, or whether it is conversion of the IDR into the equity, in all these cases it has to be submitted. If not submitted, there is a late fee. According to the return, type of return, the late fee will be calculated. Till it is all rectified and done, no further remittance will be allowed by the AD bank.
Madam, very detailed one with respect to whether it
Yeah,
is
it's very
filed or
lengthy. It's
very
very
lengthy.
lengthy. It's actually much more. It's
Yeah, yeah,
very lengthy.
yeah. You're very crisply, briefly touching upon every aspects of it, but it's a subject by itself. I understand, and we have highlighted about the quality of compliance. If it is full and complete, then only it is treated as complied or filed. If there is any wanting in that, it is construed as not filed at all. There are various slabs and categories of levies with
And there are
7,500.
days also, like within
Yeah,
30 days, they need to make the payment, right? If not done, then it's gone. LSF. Again, it will start from the beginning. Fresh application has to be filed. So there are many more points, it's very elaborate and very
yeah.
important feature, actually, this is.
Very nice, very nice, very nice. Dr. Raju, the investment goes at times only as a portfolio investment. Other kind is with respect to overseas investment where control is obtained by the process of investment. So when an acquisition is taking place, can I do that as an investor by making deferred payment arrangement?
This is a very serious word. I make a commitment to a foreign entity. For example, I want to invest in UAE, and I want to invest in equity shares there. So I enter into an agreement with them. I say I'll invest 1 million US dirhams. I enter an agreement. So you allot me shares or give me a LLP, that capital contribution share. I'm giving. Now, please appreciate with this point whether as a resident individual I sign the agreement or as a corporate I do,
It's an
it is the
individual.
stakes of my country. So my father of nation is Mahatma Gandhi, and his photograph is there in every Indian rupee, which has been published, which has been printed by Reserve Bank of India. So it is not a commitment made by an individual or a corporate; it is Indian commitment. So government of India is very clear. You make a commitment to invest outside India, you have to honor it. Now you defer the payment. The wordings that is used is the foreign securities equivalent to the amount of total consideration shall be transferred upfront by the seller to the buyer. It will be the foreign securities equivalent upfront by the seller to the buyer. So, who is the seller? The company will do this. So, that means you enter into an agreement, don't keep quiet. You are only deferring it. So, payment alone doesn't go outside India. And most important, you take the shares, but you defer the payment for 3 months or 4 months. 3 months later, I will pay. 90 days later, I will pay. That is agreement. Then, as a buyer, you indemnify the seller for such amount. So that means it is equivalent to giving a guarantee, indemnify. So when there is what do you mean by deferred? You take the shares, but you don't remit the money, or it should be simultaneous. You send the money, then share allotment. Send the money, then share allotment. So then that transaction is different. Allotment first. So that means you become owner of the company, but money doesn't go there. So then Reserve Bank of India will question you. So then you indemnify. Then when moment you indemnify, it is equivalent to giving guarantee. So therefore, that is the lock. This regulation number 7 of Reserve Bank of India's overseas investment, they make it very interesting point.
Madam, thank you, Dr. Raju. Madam, periodically the financial statements are prepared to comply with the requirements of applicable laws. One of the financial requirement with respect to the balance sheet is based on the quality and development in investment. Can that be restructured in respect of the foreign equity permitted when there is a ODI?
Yeah, the question of restructuring, we understand when it comes. We all know that only when there is going to be accumulated losses. right?
Yeah.
So they
Yeah.
want to restructure the balance sheet,
Yes.
right?
Yes. Yes.
So whether it is allowed is
Yeah.
the resident, a person resident in India who has invested there, he can permit it. He or she or the company can permit this
Yeah.
restructuring of the balance sheet.
Yeah.
So how do I calculate the accumulated losses for it?
Mm. Mm.
Then what is a proportionate losses? So I need to know, right? So for
Oh.
that, if I have got an equity there, or if I got a net debt, right, I have invested in the debentures, then in that case, that entire amount has to be taken into account. Otherwise, if it is going to be the restructuring part of it is going to be only from the point of equity, then in that case, only the investment in the foreign entity has to be taken into account. So
Oh.
this OI rules, the overseas investment ODI rules, rule number 18 talks about it. It tells you that this should clearly show you what is a likely loss, proportionate amount of losses that I will be inquiring vis-a-vis my share in the equity part of it, and what is the value of it, what is the value today, the value has come down, how much has it come down. So all that, when by doing this, what is my present value of the equity that I'm holding there, has it come down, what is the reduced outstanding value today. Okay, but sometimes we all know, like, this, we you guys know it very well, the revaluation of assets. But
Yeah.
whenever uh, I mean, such kind of revaluation of the assets in the books of the company is done here, like, then in that case, we will not be using this provision at all regarding restructuring of the balance sheet of the foreign entity.
So prima facie, the restructuring is permitted, subject to the methodology that is to be adopted in arriving at the value. There are procedures and implications involved. Thank you, madam. Now, Dr. Raju, we have discussed about these overseas direct investments, various kinds, and everything. Is there any restrictions or the prohibitions in making this ODI? Dr. Raju.
Yeah. There are many restrictions, maybe a few restrictions. Let me make it very clear here. Number one, real estate activity outside India. Now, real estate activity, I want to make it very clear. They make it detailed. For example, property development in Dubai. There is a company there. I want to invest money in that particular company as a shareholder. Permitted. But buying and selling of real estate or trading in transferable development rights, this is what is prohibited. Prohibited. So they have made it very clear that what is permitted, development of townships is permitted, construction of residential and commercial premises is permitted, roads, bridges is permitted, where India will be, Indian investors will be contributors to the infrastructure. But buying and selling of real estate or trading in transferable development rights. So what do you mean by this? So that means infrastructure development I will permit, but you want to make a profit in buying and selling. No, I will buy and I will sell. So that part alone is prohibited. So unless and otherwise there is a generic permission. So can I actually make a request to Reserve Bank of India or to central government to permit? No. So as of now, they don't permit. So they are very clear. You want to develop infrastructure there, you want to invest money there, agreed, but not trading off.
So,
That time I want to only invest and want to make profit out of that delta increase. No. Second, the gambling, not permitted. Similarly, dealing with financial products which is linked to Indian rupees without approval of Reserve Bank of India. So that means I can deal with financial products dealing with foreign currencies, but not connected with INR. So any derivatives which is connected with the fluctuations in rupee variations, I cannot invest outside India. That has been restricted. So these are all some of the areas where the restrictions are there. One more very, very important restriction they have made: the overseas direct investments in startups. I repeat, in startups. Now, no, it is only a startup only. No, can't I invest there? I want to make one point here. Startup has to be encouraged. Every company is a startup only, but any ODA in startups, where the laws of the host country, okay, where the laws of the host country or the host jurisdiction shall be made by an Indian entity only from the internal accruals, whether from the Indian entity or group or associate company from own funds of such an individual. That alone has been restricted. So, not otherwise. So, startup is permitted, but this one particular exceptions alone is not permitted. Now, the third one I have already mentioned, that is called the round tripping. So, where you will invest in one company and that company again will invest in India. So that means investment made in a foreign company, that foreign company has invested again into India. So that round tripping of transaction is not permitted. So these are the restrictions. Technically, they have designed in rule number 19. So these rules are prescribed by Department of Economic Affairs. So has to be implemented by Reserve Bank of India.
So very nicely touched and highlighted about the distinction involved in real estate. I understood like this. If you want to develop the infrastructure, you can go in. If you want to trade in, buying and selling of the shares or investment to make only profit, that's not permitted. Restrictions in gambling, financial products, one startup with a categorization of earnings there and investment and direct investment from India for a startup, highlighted about the distinction. Finally, touched upon very nicely about the round tripping or round going in and coming back by the same entity to and fro, settling of effective, in loose terms, settling of money or a fund should not be. Then these are the kinds of restrictions or the prohibitions.
But of
Madam,
course,
yeah,
there are exceptions to that round tripping also.
yeah,
Banking companies.
yeah, banking,
Banking
bank,
companies are NBFCs, insurance
yeah, yeah.
companies, government
Naturally,
companies. So they are all
naturally,
exceptions.
quite natural banks have to settle discharging money and obligations and receiving. That has to be there. Logically, that's very nicely highlighted, Dr. Raju. Madam, we have talked about this late submission fee and other things in respect of annual performance report, touched upon very detailedly. What is this annual performance report, madam?
Yeah, actually, we have discussed also about other reports and returns, right? But I was mentioning a little bit more, stressing on the annual performance report.
Yes.
Every Indian entity or a person resident in India, an individual, okay, if they invest in a foreign entity, they'll have to submit an annual performance report, I told you. But when is it to be submitted? On 31st of December. Every year as on 31st December, right? But we know in most of the Western countries, accounting year is different. It could be Jan to December, right? So if that is the case, for you to get the audited financials it will take time. So it has to be submitted. The previous year's report, the performance report up to 31st December of last year, should be submitted before 31st December of this year. Okay. But here, one point of contention is about the Indian entity, which is holding less than 10% of the equity of the foreign entity, need not submit this report. So it's kind of giving a liberalization to those who are holding for less than 10% of the equity in the foreign entity, right? Or if there is a foreign entity which is under liquidation, naturally there's No performance ends liquidation, or otherwise it was an adverse performance, right? So that is not there, it is not required. Okay. But in certain countries, we know there are a lot of restrictions. Every country has got its own internal laws. The regulatory guidelines are very strict. So in those countries, in case they cannot part with the audited financials to the Indian entity here who has invested, then they can get the unaudited financials and prepare the APR. But again, we'll come to you as it has to be submitted by the auditor, certified by the auditor, right? There can be one or more investors. Who has to then do it? Whose responsibility is it? So they can choose the highest investor. It is your responsibility to file the return. Fine, the highest investor can do it, or all of them can submit the APR jointly also. What are all the things that will be detailed in the APR? When you see, we know about the change in the position, the financial positions, the figures basically, and there is something more from non-financial angle also. So whenever there is any change in the ownership pattern, right, like they go for a step down subsidiary, or they've withdrawn from that, there's an investment in another subsidiary. All this has to be also mentioned very clearly in this APR. Apart from this, when we talk of APR, we also talk about the investor, the Indian entity. The Indian entity, as per Reserve Bank of India guidelines, time and again there are changes. We need to submit the foreign liabilities and asset statement. That is a must. So normally it's taken on yearly basis. So as and when they demand, we can always give that also. So overall, APR is very important for us to know the pulse of the foreign entity where the investment has been made by the Indian investor.
Very nice. Thank you, madam. You touched about this particular annual performance report, highlighting about FLA and the implications. And Dr. Raju, what is the mode of payment that is involved for making overseas investment, which is permitted and which is prohibited?
Actually, there is no specific prohibition they have made. What is permitted has been given. So, other than this, all are prohibited only. So, cash is prohibited. So, in master direction, they have given in detail what is not to be done and all. So, cash is strictly prohibited. So, then what are the modes? Number one, remittance through banking channels, so through authorized dealers. Number two, I may have funds in NRE, so I need not ask the permission of AD. So straight away from the NRE account, I can remit. Number three, I already have some securities, investments in India or investments outside India, equity shares. So can I trade this? I will not give money to Canadian company, but I will say I have some equity shares in Tesla. You take those shares, you give me your shares. So valuation must, and there is a pricing guideline they have made very clearly that both valuation has to be done, and as per the internationally accepted valuation standards, internationally accepted valuation principles, the valuation has to be done, and they made it very clear that either a CPA in that particular country, and as far as in India it is concerned, it is either by a regulated valuer. So the registered valuer under IBBA, but since it is a FEMA, chartered accountant valuation is accepted. And another one important aspect is, can I use the proceeds of a sale of ADR, GDR, and the stocks transfer? And can I bring money from Dubai as an external commercial borrowing? GKR will borrow from Dubai, and this money I will remit to Australia. Is it permitted? Yes. So ECB should come through ECB route, permitted route, and money from the ECB to Australia should also go as per the overseas investment regulation. So there are two regulations applicable: inbound and outbound. Two regulations are applicable, and both the regulations, if you satisfy, that is also permitted. So these are all the permitted route through which payment can go outside India.
Thank you, Dr. Raju. Madam, there are what are the specific obligations that is needed, that is to be complied with rather, by a resident Indian while acquiring equity capital in a foreign entity?
Yeah, we have discussed about the filing of
Yeah, yeah, yeah,
returns, everything,
yeah,
reports, everything. So
yeah.
that's one part of it. That also comes under the obligations and the duties of the Indian investor only.
Correct.
But first, before we go for there, like once I mean, I have to get a number, a unique identification number to send my remittance, right? So how do we do all that? What do we do it? So we need to get through the AD Bank, we normally get the UIN number, the unique identification number. That is before sending the outward remittance itself, or any other, like as you said, like the permitted conversion of my other securities or transferring it in any other way that I acquire the equity, conversion of the debt, everything, right? So whichever is earlier, that UAN number has to be used there. Okay. And if the investors in that, it's there are more than one person who's doing this investment, right? From here, from this company, then we all have to use the same UAN on this particular remittance to this particular company, and through the same AD as a group when we jointly invest. Okay. After I invest, I will be getting a share certificate from there, right? That has to be submitted to the AD Bank within 6 months from the date of allotment or receipt, or from the date of creation, or from the date at which it was capitalized. It could be anything else, no, where it is capitalized, changed. Okay. If it is, this is from the point of view of the UAN, it is from the point of view of the share certificates. Okay. If after investing, now what do I have to do? I have to submit all these returns. ODI 1, 2, 3, FCA, FAS, all this, okay. Then what else? Annual performance report, okay. Then what else do I have to do? Now, let's say I'm coming out of that. I'm exiting out of that company, or I'm disinvesting, or there is a liquidation. So I need to get back the money. So that amount I have to get back within 90 days. That is my very important obligation. When the money goes out, it has to come back to India. In case I disinvest, I opt for getting out, exiting out. When, okay, this is Dr. GKR was telling from fund based, non fund based. Fund based, fine. Now, there is not non fund based. There's a guarantee. Say it's a bid bond guarantee. So I'll have to make to get that bid bond guarantee through my AD bank, like it's for payment of the EMD, right? I need to take a guarantee from my bank, and my bank has given. That's allowed. AD bank has issued the guarantee after taking account indemnity from the corporate or the individual. Now the guarantee is issued. When the bidding is happening, maybe they'll want an open-ended guarantee. That can be given, that is also allowed. But once the bidding is over, within 3 months from the date of awardance of the contract, once this fellow gets the contract, within 3 months from that date, this guarantee has to be modified as a close-ended guarantee. All of us know, as per the master direction of RBI on issuance of guarantees, that it has to be a close-ended guarantee only. So these are the obligations and duties of the Indian investor.
Madam, this particular UAN from AD and hello, Dr. Raju, you are listening, Madam?
Oh, yes, sir.
Yeah, yeah.
Yeah, it's a certain sound only. So you are nicely conveyed about the obligation of when there is an investment going, it has to come back. So that you have highlighted in the time aspect and the obligations that is needed. It's at the time of investment, everybody is very happy. When you want to exit and come back, generally that is relatively in practical term is difficult, but at this time the compliance is very, very important. You have very nicely highlighted about it. Sorry, we touched upon this approval automatic or approval route and all. What are the kind of approval that is required either from Reserve Bank of India or central government in respect of this overseas investments? So
For a
highlighted
plain
about.
vanilla scenario,
Yeah,
that 4x is the criteria, net worth
yeah,
to
yeah.
4x
We
for the
touched upon.
audited, latest audited balance sheet.
Yeah,
Now, there are three types of thing. One is approval from Reserve Bank of India.
correct.
So then, as a investor, as a resident person, if I have to invest outside India, and there is a requirement to get approval from Reserve Bank of India, I only when the limit it crossed the limit. For example, what is the limit? I said 4x. Now, sometimes that 4x also has a ceiling. That 4x has a ceiling. The 400% has a ceiling, and that ceiling is 1 billion US dollar. Maybe
Oh,
we are all used to the direction also in dollars only. So I will tell in the Indian rupees, it is almost 8,000 crores in INR. Any investment above 8,000 crores INR, then that means in terms of my audited balance sheet. So then I have to go to Reserve Bank of India to get permission. So viability, valuation certificate, so many I have to give. So first it will be convinced by the AD, then AD only will forward to RBI because RBI doesn't know the party. So only the family member is head of the family is the AD. The mother or mother-in-law is always the authorized dealer only. So mother only has to give the permission and through the RBA route. Now, I want to invest in certain geographies, which is specified geographies and restricted countries. Pakistan, Mauritius, okay, Shells. So there are certain countries where it is not that it is not permitted or prohibited, but even Reserve Bank of India, it is not there. So first application I'll give to my mother or mother-in-law. Mother-in-law will give to the father-in-law. Father-in-law will give to the great father, great grandfather. So that is central government. So AD to RBI and RBI will forward to central government. See, there is one bank, one customer there. They want to invest in Mauritius, Shells. So what do you say? So, so the viability, reason, benefit. Who is the? See, there is one very interesting word that has been used in direction. This is not there in rules and regulation, but the directions. There are three things. First is FEMA Act. Under Act you have the rules. Under rules you have the regulations. The Act is by the ministry. Then the rules is again given by the ministry. Regulations by the RBI. Then there is a direction given by Reserve Bank of India only to the authorized dealers. So in the direction number 3, permission for making overseas investment, they have given one very important point they have mentioned. Benefit which may accrue to India through such investment. They have to give a write-up. What is the benefit by doing this much investment? Money goes from India there. Why? What is the benefit to India? So this has to be explained by the AD. It is not that easy. So then only permission will be granted. So RBI only 1 billion US dollar limit I cross. Even for example, my if I say my net worth is 4,000 crores. 4,000 crores means 4 times of 4,000 crores is 16,000 crores. Can I invest 16,000 crores? No, because 8,000 crores INR is the ceiling. No, no, no. 16,000 crores 4x is there. That is only in schedule of the regulation. Okay, schedule of the rule that financial commitment 4x is given. But here in the master direction, they are given very clearly. Bank, please ensure that the 1 billion US dollar is your limit. Beyond that, even you have to bring to RBI for the permission and all these documents. It will be a very big research report. It is not just like two-page report you give to RBI, they'll give. It is a big research report, and the bank has to do all these working. So therefore, the customer has to, investor has to do all this working and convince the AD first. Then only it will happen. Third most important thing. Today, N number of investigations are going on in a lot of investigation agencies, right? From ICA, ICSI, ICMAI, Insolvency Bankruptcy Board of India, IRDA. So then you have SEBI is there. Then you have the Serious Fraud Investigation Office. So anywhere, any litigation has been going on, or any proceedings is going on, or I am a borrower with the bank and I have been that is a NPA, or I am a willful defaulter declared by Reserve Bank of India, or investigation is going on with the financial sector regulator, investigation agency, then if I have to do overseas, I need to get NOC. Then only it is possible. Otherwise, not possible.
Dr. Raju, you have highlighted about automatic route is general. If it is beyond the prescribed norms or under the approval route, then the very light, loose word I can say it is the application through the mother-in-law, through the father-in-law, the ultimate great grandfather-like situation arises. There is a role for AD, Reserve Bank of India, and central government, and the justification for the benefit that is going to accrue from the point view of government of India. That is foreign exchange perspective has to be justified starting from the AD perspective where there is an application goes through the channel. So very nicely highlighted about the approval. Finally, you made an observation with respect to NOC. Dr. Raju, you made something about NOC. Madam,
Yes.
is there any NOC required from the lender bank or from the regulatory body or investigative agency with respect to these type of investments, madam?
Yeah, yeah. Thank you. Actually, I'm just continuing with where he has left it. NOC has to be obtained in two, three cases, right? One he has already explained.
Yeah.
Dr. Jekior has already explained. Whenever there is any investigation is going on, or when this account is an NPA or a willful defaulter, then it has to be the NOC has to be taken up. Whenever such remittance has to be done or any disinvestment is done. In both the cases, NOC has to be taken up. I'm just continuing from where he left. Normally, NOC has to be taken. Like, for example, I'm changing the AD. I told you one point. One AD, one UIN, all through for that, one FE
Correct.
and one
Correct.
Indian entity, right? So whenever I'm changing the AD, I have to get the NOC from the existing AD whenever
Ah.
I go to another AD. That's one more point. Last but not the least is NPA Nayuva. Like when we were talking about non-fund based commitment, when a guarantee has been issued, right, in favor of the FE by the Indian entity, then in that case, at that time when the guarantee was issued, the account was regular. It was a standard account. So it was not an NPA, but later on it had become an NPA or a willful default or whatever, fraud account or whatever. But now this guarantee is invoked by the overseas entity, by the foreign entity. Do we require to take an NOC? No, it's not to be taken because this commitment was given before becoming NPA. So this is all about NOC, and that's it.
Thank you. Thank you. Very nice. And normally our discussion used to be 30-45 minutes because of the
The
inputs,
topic.
so much has to be shared. So the number of questions are less. The kind of deliberations and the knowledge sharing was phenomenal. Phenomenal. I enjoyed it. Dr. Raju, there are a couple of questions if you wish that may be done because time is already we are
Yeah.
overrun. Any one or two
Yeah,
maximum
that
you can
there is
touch
a
upon.
question whether the cap is on annual investment or total. No, it is only on the total investment.
Total
It is
investment.
cumulative. So it is ultimately the
Forex.
connecting point is your audited balance sheet net worth in that four times. So we have to take the cumulative investment only. And there is a question with respect to APR. So, to our knowledge, APR is applicable 1 year after investment. So, Madam has mentioned that. So, every 31st December, that performance review report
Yeah.
has to be given.
Yes. Yes.
And this Rakesh Jha question is, I think, some more information has to be given. Whether it is investment in India or outside India, that point is not there. Now, there is one more question. What is the timeline for invested money to be brought back to India? Is there any timeline? As far as overseas investment is concerned, no such restriction has been mentioned. So, only with respect to your, for example, this is one place I want to make one observation where there is a NOC has to be received, what Madam mentioned. Now, before NPA, money gone outside India. Money gone outside India before the NPA itself. Now, after the NPA, now whether these limits and all will apply, no, it will not apply. The same is the case. Once you are based on your net worth, permission is given to invest outside India. The law cannot put pressure on you to bring the money back into India. So it is that is why you have a route called disinvestment route. Disinvestment route, restructuring route. So through the disinvestment, you can bring back the money back to India. That Madam has already explained that part also. So that is what, in short, about all these questions. Now, the one more question at the beginning. Kindly, my company is in the business of mobile sales, retail selling of mobiles in different brands. Okay. Kindly inform the limit of foreign investment in my company. Now, this is inbound investment. We'll have a separate study.
FDI.
We are not
FDI.
outbound investment. So that is FDI.
Out of syllabus question. Yeah.
Out of so anyhow,
Thank
thank you very much. Thank you very much. It was such a wonderful deliberation. I must definitely thank for leading this session by Mr. Sampath Kumarji. So nice of you. And Madam J. Lalita, it's the kind of your expertise, what you bring to this particular forum is amazing. And the clarity what you bring in giving the example is also awesome. So we wish to have your support and knowledge sharing in the coming days forward also. Thank you very much. And all the viewers also, thank you very much. Keep supporting. Today, quite a number of participation, virtual participation from various parts we are able to witness. Thank you very much.
Thank you all.
Dr. Raju, I want to say the final word. We used to watch movies. In recent times, when you watch movie, we are very conscious about time and surroundings and environment. Whereas today's movie, we never realize 1 hour and 20 minutes are gone. Thank you very much.
Thanks so much. Thank you.
Thank you.